All right, here we go. We are live. Welcome, welcome. Okay, welcome and back. Welcome and back. Welcome and back. Oh my goodness, my nerves are at my wits' end right now. I am so excited for today's live stream. Boy, oh boy, I just can't even get the first word out, which is welcome back, investors, to Ticker Time News. I am Adam, and this is the place where smart investors come to learn. Now, today, it was a great day in the market for the stocks, right? Bulls had control of the tape from the opening bell all the way to the closing bell, which rang with the major indices sitting near their best levels of the day. We crushed through resistance today, and it was awesome. Now, the major indices charged ahead on bargain hunting efforts that were sparked by reassuring earnings reports from major retailers, a hopeful eye that maybe the lockdowns would end in Shanghai next week, and some appeasing price action in Nvidia, which finished higher after trading down as much as 10% after issuing disappointing Q2 revenue guidance. Now, more on Nvidia in an upcoming video. I think you'll be surprised at what I have to say. Now, the later, or the latter, I should say, went a long way to validate many assertions that a lot of bad news had already been priced into many different stocks, especially retail. And that's why we had a big boom in many retail stocks today. And I guess I could say that there was a mindset today in many investors that a meaningful rebound effort could occur. It was apparent right from the get-go. The S&P 500, it closed above 4,000. That's a very important level. But that doesn't mean that we're out of the woods just yet. As I demonstrated yesterday, we can have relief rallies in a bear market. The relief rally can even last weeks at a time. Now, we even got better than expected guidance from many retailers. And before I dive into them, if you're learning something in this video at any time, there's this new little button that I think you might find underneath this video, and it says, quote, thanks. Tap on it, see if you like it. Okay, moving on. Macy's. Wow, this was a retailer that completely shot up out of nowhere. Ticker symbol is just the letter M. And remember, you can do all this charting at home right along with us. There is a link in the description for a free account to TradingView. That's where we do all of our charting from. As usual, I tried to lose money today, but it didn't work. Market must be broken. That's a good one. That is a good one. Let's put that one up for a while. That was definitely a good one. Look at Macy's, 19.3% on the day. I mean, it just completely exploded. We also have Dollar General. Ticker symbol is DG. Another retailer that just completely shot out of the water. This one was also excellent. What is it? 13.7% on the day. A discount retailer. Keep that in mind. Discount and retail. Those two words are going together like peanut butter and jelly right now. Dollar Tree is another one. Ticker symbol is DLTR. DLTR. Look at what Dollar Tree did today. Again, discount retailer. 21.8%. And it's getting right back into or right back above its support level, which is interesting. And then we have Williams-Sonoma. Not really detail, but it was another one that did very well. That was retail. WSM is the ticker symbol for Williams-Sonoma. Up 13% today, flat in the after hours, not moving. Well, it lost a penny, flat. All of these retailers had amazingly good days, as we just seen. They were up between 12 and 21%. Now, we had uplifting Q2 revenue guidance also from Southwest Airlines. Ticker symbol is LUV, love, right? Southwest, not up as big as these discount retailers, but up impressively 6%. And JetBlue was even up today. Now, not as much as Southwest Airlines here, but still, and just let me type this one in. JBLU is the ticker symbol for JetBlue, JBLU. Now, again, great. 3.4% on the day. And then we got upward revisions to the consumer spending report. It's a component within the estimated Q1 GDP report, which also went a long way in backing up the narrative that buying the dip and that a relief rally could occur. But there's something I need to point out with this, and it's in relation to that report. Well, maybe I'll talk about it in just a moment. Continuing on, there was another belief in the market today that consumer discretionary stocks had gotten deeply oversold. However, I must point out that we know that the consumer was strong at the beginning of the year, and these Q1 GDP pre-reports, right? We have several of them, several of these reports until we get the final one for Q1. We know the consumer was strong at the beginning of the year. That is not debated. But the consumer is weakening right now at this very point in time. So don't let that, don't lose sight of that, because it is important. And the consumer will become weaker potentially as the year goes on. That's my thesis right now. However, there's a little asterisk to this one. If the Fed does a U-turn, which is possible, we have a 50 basis point rate hike in June. We have a 50 basis point rate hike in July. The Fed confirmed that already. September, their September meeting, it was thrown out that maybe we do a 50 basis point, maybe a 25 basis point. Right now, the market is kind of starting to price in that it's not going to be 50, it's going to be 25. Therefore, market valuations need to come up some. If the Fed does a U-turn on rate hikes because we're staring at a recession, that's going to help to strengthen the consumer in the back half of this year. So my thesis right now, consumer strong at the beginning of the year, we know that. Consumer weakening right now at this very point in time, we know that. My thesis is that the consumer will be weak in the latter half of this year. But if the Fed starts to tinker around and start to loosen up instead of tightening down, that will change things. So a few days ago, when I was talking about whether investors, to be a good investor, we can't be too optimistic, we can't be too pessimistic. We need to be realists. And keeping our thesis fluid and moving and evolving as the economy continues to evolve too is also a necessity, and that's what keeps us real in the markets. So that's important to note. So we've heard a little chatter recently about the Fed potentially loosening up their grip. September meeting. That would change the thesis for this year, especially for the second half of this year. Okay. Moving on from that. Now, I did show the Q1 GDP, which further dropped. Because remember, the last estimate we got, the Q1 GDP contracted 1.4%. Now, I did share the details of this report with our investors on Patreon. And remember, if you would like this valuable information, then come join us. We'd love to have you along on your investor journey because we're all on one and we're all taking it. So click the first link in the description to join us over there. Okay, back to that consumer discretionary for just a moment. Consumer discretionary stocks being oversold. Sure enough, the S&P 500 consumer discretionary sector, it gained 4.8% today and was a star today in a star-studded lineup of sector performances that also included the outperformance of information technology, up 2.5%, financials, up 2.3%, and communication services, up 2.1%. Now, notably, those four sectors have been the worst performing sectors this entire year. So their outperformance today lent credence to the view that today's rally had the markings or the makings of being a rally off deeply oversold conditions. Now, with today's gains, the S&P 500 reclaimed a positive position above the 4,000 level. It's now up 4% for this week, and presumably this destined to break a 7-week losing streak, along with the NASDAQ. And the Dow Jones, for its part, it could break an 8-week losing streak, the likes of which have not been seen in nearly 100 years. Can you believe that? The Dow losing for 8 weeks straight hasn't been seen for nearly 100 years. That's just incredible. Let's look at this S&P 500 real quick up close. I'm going to go to the 5-minute when we load it so you can see this. All right, on the 5-minute chart, Adam, when are you trading SPY? I'm charting it. I'm learning it. I'd probably say next week I'll have the SPY on regularly, just like I have the S&P on regularly. That's a commitment that I am making to you. Sir, thanks for your wrap-up video. Please do a video on cybersecurity sector, Zscaler. Gotcha. I have the video on Palo Alto. It's ready to be uploaded. Please give your thoughts on TLT2. Okay. PAL late 2023. I told you idiots it was transitory. Oh boy, that word transitory. Didn't they retire that word because it got so overused? Okay, S&P 500 right here. And you can see for the past 3 sessions, it has been going up and up and up. And it really accelerated this morning. Right here. This morning's opening play right there. So from the time the market opened at 9:30 a.m., it shot up nearly a percentage point, 0.7%. And then it just continued climbing all the way. Not a single red candle for the first nearly hour of trading. And then we reached this peak up here, okay? This peak up here. We tapped it twice today. We hit it once early afternoon, about 1 o'clock, and then we hit it almost at the close, and then the last half hour kind of sold off a little bit. This peak right here is important. It's about 4,072 on the S&P 500, and we closed at 4,057. So not far off, maybe 20 points off. This area is an important area, but the biggest and the The biggest thing to know about today is this morning. That first 5 minutes of trading, that's when we broke above 4,000 points. Because remember yesterday, we came real close to tagging 4,000 points right here, almost at the close. Almost at the close. And we talked about this yesterday during the live stream. If the S&P 500 could break above 4,000, then we'd have a green day. Within 5 minutes of the market opening, we broke 4,000 and we did not look back. That is important, and it's something to note. We closed above it. That's also another very important note. We closed up here. That's above that 4,000 mark. Very important to note. So looking ahead, what stopped the S&P here at this 4,000 or 4072 area? 4,072 or 4072. What stopped us? Let's go look at the bigger chart. Take some of these markings off of here. Let's go back to the one-day view and look at where we closed and what's going on here. This is going to tell us a little something. I'm going to take volume away. Volume, and just one thing to note about volume right quick. Let me move the candles out of here so you can see volume. If you look at the past 4 sessions, volume has actually been pretty light. Pretty light. Today we were at 2.3 billion. 2.6 is the average for volume right now. So we're just under that, and we have been for the past 4 sessions. And I would say that the past 4 sessions have been very critical to us turning around and at least getting some sort of a relief rally in the short term, without forgetting about the longer term thesis that we have. But here, let's look at where we closed today. Okay? There's a red line here, right here. If we look at where we closed today, why is it significant? This area is significant, and again, we closed right here, okay? I should be using a different color so it doesn't match the candles. Here, let's do that. Okay, so we closed there. If we drew a line straight across from where we closed, my line's not perfect, but we do like this, right? It's kind of following that red line there. The reason this area is significant is because it acted as support on May the 17th when we had this little rally, 4-session rally right here. One of the 3 was kind of flat, but we had 3 red candles out of 4. We closed above this 4070 area. That's important. The very next day, we got rejected at that point, and we sank 4%. That was a big rejection. Now, we get this big, it's almost like a hammer candle, where it's got a big wick at the bottom, and then the candle sitting at the top, kind of like a hammer. We get this hammer candle here on Friday. Big dip, bounces off that support. We break out of this falling wedge that we're in, right? We have this resistance here, this purple line coming down. We broke through that yesterday. So it's almost like we were in this wedge pattern, and we broke out of the wedge pattern yesterday. And typically when you break out of wedge patterns, you're going to go and end up someplace like up here where that pattern began. So this area here It's another area that we have to break through tomorrow in order to keep this rally moving. And with the reports that came out today, there are a lot of investors in this market that are of the belief that we need to have another relief rally like we did back here at the end of March. This rally here at the end of March. This is what investors are looking for. Is that what we're going to continue to get? That's the $1,000,000 question, right? Are we going to continue that? If we get good news tomorrow, then there surely is a great possibility that we can. Just taking some of these drawings up here to clear up the chart a little bit. Okay. All right. So we did a great thing today, breaking above 4,000. That's awesome. Our next area of really strong resistance, honestly, isn't until we get up here to 4,500. That's the next area that has really strong support. But we've got little bits and pieces of, resistance. I said support. 4,500, that's the next, like a super resistance. And we've got little tiny ones moving up as we go. Right now, we need to get above this 4070 mark. That area, it's got slight little resistance there. It makes investors a little nervous. Are we going to sell off? Because the last time we were here, we did sell off 4%. So that's got investors a little worried, a little shaken up about it. Started to see inflation last year on some products. This seems like it will be long term. I do think a lot of the inflation that we have is starting to get built in, and that's not a good thing. We do not want inflation to become structural within the economy. That's a bad thing. All right. Now, while stocks were getting their rebound, I guess I could say groove on today, treasuries ultimately finished, what should I say, flat-footed. They didn't really do much. The 10-year today, it was only up 1 basis point to 2.76%. And remember, the 10-year is very, very concerned about growth and inflation. Look at the 10-year. US one, get my cursor here. US 10Y. And I want you to see what's happening here. The 10-year is forming resistance. Now, as long as this 10-year continues to come down, that gives stocks at least one reason to go up. And if the 10-year is coming down, that also needs to adjust our thesis on the housing market. Because with the 10-year coming down, that means mortgage rates are coming down. Mortgage rates a couple weeks ago, at least here in Northern Virginia, was over 6%. Today, they are getting back down to around 5%. That's a big change. That could help fuel the housing market just a little bit further. That could provide a little bit of breath to blow up that housing balloon a little bit further. We have to watch that one. Remember, our thesis on any company, stock, sector, the market as a whole needs to stay fluid. Now, in front of the April personal income and spending report that comes out on Friday, It also includes the Fed's preferred inflation gauge in the form of the core PCE price index. That comes out on Friday, tomorrow. That's going to dictate what this market does. If that inflation has come down some, the market's going up. If that inflation has leveled out, plateaued, the market could go up on that. But if that inflation has ticked higher, the market's not going to like that. Not at all. Because that's going to shape the Fed's opinion on whether to tighten or ease. So we have to pay attention to what the core PCE price index says tomorrow. Now, in the after hours today, let's put the 2-year up here. It didn't do US 02Y for the 2-year. As you can see, it did nothing today. It's just continued moving flat like it has been for the past 3 sessions. I need to move this over. There we go. It's done nothing. I mean, seriously, it's been flat for 3 sessions in a row. And the 2-year, remember, is sensitive and moves because of the Fed's fund rate. So if this is starting to drop, then maybe the Fed is going to, in their September meeting, not do a 50 basis point rate hike, but maybe a 25. It'll be interesting for sure. Okay, in the after hours, we have gotten some earnings reports, and there's a couple that I want to touch on. Costco is one of them. COST is the ticker symbol for Costco. Costco in the after hours, it was up 5.6% regular session. It's down 2% in the after hours. Now, this is interesting. Costco had a lot of good in their earnings report. And like I mentioned earlier about NVIDIA, remember NVIDIA sank nearly 10% after their earnings report. But after digging through their earnings report last night, it wasn't that bad. It was actually pretty good. And that's why the video I have coming out on NVIDIA after doing my homework on their earnings report last night, man, investors took a knee-jerk reaction to what they thought were bad earnings. But actually, they were really good. Really good. And that's what helped set off NVIDIA on their rocket ship today. Costco, could it be in the same boat? Could investors be taking a knee-jerk reaction to this one? Well, I haven't read through the earnings transcript, but I did find some very interesting information. To start with, they beat their EPS by 2 pennies. Okay. Revenues grew 18.5% year over year to $52.6 billion, which came in above expectations. And Costco has now topped revenue expectations for 10 straight quarters. Their adjusted comparable sales jumped 10.8%. Membership renewal rates hit all-time highs in Q3. Membership fees came in at $984 million. And that's up from $901 million a year ago. They are quickly approaching the $1 billion in membership fees mark. That would be incredible. Now, the company believes increasing its membership fee right now, ahead of its typical timing, is not the right thing to do. So they're not going to do it. Traffic in their stores increased 6.8% worldwide and 5.6% in the US. Average transactions, they were up 7.6% worldwide, but they were up 10.4% in the US, and inflation had something to do with that. Underperforming departments were liquor, office, sporting goods, and hardware. And that's very similar to what Walmart was saying. So, wondering, what does that have to do with discretionary spending? Because remember, that sector was up really big today. But it was discount retailers that saw the biggest rebounds. So it's not just any discretionary spending that's moving up. It's discretionary spending where people can find good deals. We also had Zscaler report their earnings. Ticker symbol is ZS. I don't know why soybean futures popped up there, but it sure did. They were up 7.2% during regular session, up 1.3% in the after hours. Earnings, not so bad. They beat by 6 cents on EPS. You can see there, that's 59.3% surprise to the upside. Revenues rose 62.6% year over year to $286 million, which was a 5.6% upside surprise. They also issued upside guidance for Q4. But how is it going to turn out? The first reaction by investors, Zscaler was actually down right after the report came out. But I think I'm seeing some sort of I don't know what to call it, a pattern where investors are so nervous that if they don't see stellar top line numbers, they run from it, which then creates an opportunity for those who stick around and actually look through the earnings report. Because investors so far this year have been conditioned that it's just going to continue to get worse. Some of these companies are doing something good, and that's what we have to pay attention to. Another one that reported earnings in the after hours was Workday. Ticker symbol is WDAY, WDAY, for Workday. Now, they missed EPS by 2 cents. Let's pull it up here. That was a 2.5% surprise to the downside. Revenue came in up 22.1% year over year to $1.43 billion. And I call that practically flat. They missed it by they beat it by 9 million, but that was pretty much flat. But look at them in the after hours. Workday's dropped 9% in the after hours. Not looking so good. Now, Workday expects Q2 subscription revenue growth of about 22% year over year. They also raised their fiscal 23 subscription revenue a little bit, but they still raised it, not lowered it like many other companies have that have already reported. Now, remember, Workday was priced to perfection. I think I mentioned that yesterday's live stream. I've done a video breaking down Workday in the past, and they're intriguing to me. I like to watch them and see what they're going to do. They've got an interesting story. But dropping 9% off of their earnings report, that wasn't perfection. They did not produce perfection. Therefore, they dropped 9%. Now, another company that reported in the after hours, and this is the last one I'll bring up right now, is Ulta Beauty. I know, beauty products, it's not typically a guy's thing to think about, but they did a really, really good job. Ticker symbol is Ulta, ULTA, Ulta Beauty. They were up 7% during the regular session and up 6% in the after hours. They beat EPS by $1.81. Revenue rose 21% year over year to $2.35 billion. Comparable sales increased by 18%, and they issued upside guidance for fiscal year 23. They're on a roll right now. I can't wait to read through the earnings call transcript on this. But on the surface of their earnings, really, really spectacular. Okay, let me wrap this this part up with the economic data that came out today. So for the week ending, because we've got the unemployment, week ending May 21st, initial claims decreased by 8,000 to 210,000. And that's exactly what was to be expected. Continuing claims for the week ending May 14th increased by 31,000 to 1.3 million. The main thing with this labor market is that for the past 4 weeks, if you look at the average over the past 4 weeks, so the past month, it averages out, I wrote it down, to 1,347,500. 1,347,500. That's for continuing claims. That's the lowest it has been since January the 17th, 1970. The labor market is very, very strong right now. And it looks like that's going to continue. How long is the question. Now, I talked earlier, we got the second estimate for Q1 GDP, and it was revised down to show real GDP decreasing at an annual rate of 1.5%. And remember, the last reading estimated that GDP contracted by 1.4%, so it's gotten worse. It went from contracting 1.4% to contracting more at 1.5%. Then we got pending home sales. That declined 3.9% month over month in April. We knew this was coming. The housing market has slowed down. However, if rates continue to slip down little by little, that could help to push along that balloon a little bit further before it falls to the ground. When you were a kid, did you ever play with a balloon, maybe with your brother or sister, and you guys were bopping it back and forth, not letting it touch the ground? How many times can we hit this balloon back and forth before it touches the ground? That's kind of like the housing market right now. We're just tapping that balloon, keep trying to keep it up. It's trying to fall back down to the ground, but we tap it to keep it up and elevated every once in a while. With mortgage rates coming down, that's the tap to keep it up a little bit longer. All right, and then the last thing is, remember tomorrow we get the personal income and spending report. That'll be key. Okay, let's see. What do we want to talk about for the rest of the video? And just real quick, if you learned something in today's video, then do me a favor and click that like button. That is very helpful. Sharing this video is also one of the best things that you can do to help this video get out and reach other people. Click subscribe if it's your first time watching. And if you want more of this information all throughout the day, then make sure to click the first link in the description and join investors just like you and me over on Patreon. We'd love to see you there. All right. What do we have? So cybersecurity, Palo Alto's coming up. I did NVIDIA. That should be coming out shortly. CrowdStrike. I like CrowdStrike. There's a lot of good ones there. And then of course the SPY, which I'm still marking up and learning it. Hopefully on Monday we'll get those get the SPY into the video regularly on a daily basis. TLT. $20-year Treasury bond ETF. iShares 20+ year Treasury bond ETF. Well, this thing has just been coming right on down. So tomorrow, yeah, I have talked about, ask Devin in the chat about PayPal. That is something that we covered extensively, and that one was a loser. PayPal was definitely a loser for me. Let's see here. I'll pull up PayPal too. Expectations for tomorrow's report. No, I don't have any expectations for the report itself. I just want to make sure that inflation is truly cooling off. Let's see. All right, here's PayPal right here. About the reports that come out tomorrow, as soon as they come out, I will be sharing them on Patreon, just like I did today or yesterday about the Fed minute. No, that was about the Fed minutes. All right, so here's PayPal right here. Man, this thing has just gotten so hurt and so crushed, and it's lost a lot of love. But if we look at this, I mean, PayPal, I mean, unfortunately, it doesn't even fit into the 2019 theory that we were talking about a couple days ago. This thing is well below 2019. This thing is going back to 2018 at these prices. It's ridiculous. But I'm going to put a line here on the chart. There is this area that PayPal has support right here, right about 75. And let's go in here and look at this a little closer. So we could really make it a zone here. And let me just get the box up. And let's make this zone. So we're going to come in at about 89 is like the top of this thing. And if we go down to the bottom is right about 71. So that's a zone that PayPal could kind of bounce around in. And this was dated December 7th, 2017 to, was that, did I look at that right? Yeah, December of 2017 all the way through 2018 and ran up to January of 2019. So it sat here for over a year, nearly 2 years. It sat here for a long time in this zone. And again, the bottom at 71, the top right about 89. So that box is right about where PayPal is now. Okay. If you see that, and we'll zone in, we'll get in here tighter on where we're currently at with PayPal. Okay. So it's got this low that was made here on May the 12th, and that low was $71. And remember that low in the box back here, this low is sitting right about $71. So it makes a lot of sense that PayPal is in that area right now, because it had years of support at, $70, $71. So it makes a lot of sense that it's finding support there right now. I mean, goodness gracious, that was way back in 2017, the end of 2017, all of 2018, and the beginning of 2019. A year and a half, I guess, is more likely. So it's been there for a long, long time. So I am actively selling puts at 72, where I have a support line. So your support line there is good at 72. You could maybe bring it down to 70 even, but that's a good area, definitely. And if it breaks that, then, going back here to this whole year, it's been bouncing off this low here. This is $70. This low is 71, $70.22. And then over here, 71.6, 72.2. And then going back a little bit further where it first started, we got 70.8, 71.6. So yeah, that 70 to 72, that's a good area, definitely. And if it breaks that, that'll be a hard break, because if we go back any further, right? If we go below $70, I mean, there wasn't much support here. I mean, it went from, in the 40s all the way up to 70 with hardly catching a breath. I mean, that was a nice rally right there. So, I mean, if it breaks down below 70, watch out. I mean, support for this thing is in the 40s at, next. So I don't think it's going to go that far. I think it's probably going to stay right about where it is right here. Maybe it even starts a range. It seems like it's getting a top right about 93. We can put a line right here and you can see it better. It actually matches up over here too with these. So if I go straight across here, you can see the resistance. Now, hold on, got to go up just a little bit. There's resistance back here at the beginning of May, and it actually acted as support 1, 2, 3, 4 different times at the beginning of May, at the let's see, February 25th, March 7th, sorry, March 8th, and March 14th. So that line seems to be like a resistance. So you could say it might bounce around between 70 and 95 as a as an area for now. Let's see here. I bought a few Dell puts since they were so cheap. Tomorrow they should be worthless. That is true. Let me pull up Dell. Yeah, they ran from earnings. Let's see here. See, remember the chart that I showed you guys a few live streams ago about the NASDAQ divided by the S&P 500? Yeah, with all this crazy, all these, oh man, I should have erased all these lines. See, this is, let me just clean this up real quick. This is the NASDAQ divided by the S&P 500. So it's showing whether the NASDAQ is outperforming the S&P 500 or whether the S&P 500 is outperforming the NASDAQ. So let's shrink this up a little bit. So we're on the daily view on this. And I just want to get last year and this year on it. So 2021, it really bounced around. There were moments when the NASDAQ was outperforming the S&P outperforming the NASDAQ. Well, the NASDAQ outperforming peaked in December of last year. And from December of 21, it fell hard until the middle and end of March when we got our snapback rally. I think we're about ready to set up another little snapback rally or relief rally for tech stocks because they have become so oversold right now. And like I was pointing out in that live stream, at that time, if we measured from that close to resistance, we were only about 2% away from tapping this support. My apologies. I'm just getting it all mixed up today, aren't I? We're about 2% away from the NASDAQ being an underperformer to the S&P before tapping support. And every time it tapped support in 2021, it bounced. In November of 2020, it tapped this support and it bounced. So this support line has been in here for over a year now. I mean, it's rarely used because usually technology for the past couple of years has just been outperforming it. But we are only a couple of percentage points away from touching this support line. Now, it's possible I mean, if we go look at our snapback rally that we had here at the middle to end of March, it was not bouncing off of this support. It was more up here, almost, not really. It didn't line up with this at all. So it has become really oversold right now compared to the S&P. So the NASDAQ, it's going to be outperforming the S&P 500. If we can keep this rally going, NASDAQ will outperform S&P 500 stocks. So keep that in mind when you're using options. We are dreadfully close, or maybe dreadfully is the wrong word if you're wanting it to go up, but we're really close, less than 2% away from that major support area for the NASDAQ to outperform the S&P stocks. So technology is really due for a bounce. And if I change this over to a weekly chart, it becomes a little more clear that we are getting dreadfully close. Now, one thing that I do find very interesting that could change this a little bit is if you notice, and I believe I pointed this out in the live stream, at how we are right on the 200-day moving average. And it kind of like stopped right at it. That could provide the support needed to kick off a little rally for the NASDAQ and all the tech stocks within it. So keep this in mind when you're doing options. The risk reward right now of shorting or doing puts against technology stocks does not look very enticing. What looks more enticing on a risk reward ratio is actually doing call options on tech stocks, but not quite yet. Do you see what I'm talking about here? I hope I'm communicating this clearly, so you guys are understanding the dynamics here, and how oversold tech is, and how it's really due for a bounce higher. Let's see here. Oh yeah. Yes. PayPal was a complete disaster. PayPal, I failed on PayPal. So there is proof that I don't get everything right. I definitely failed on PayPal. Let's see here. Yeah, SoFi had a nice pop today. Yeah, I like SoFi. I like SoFi a lot. Yeah, PayPal had a long fall. Yeah, SoFi, I like SoFi. Yeah, here's SoFi on the chart right here. Weekly chart. So you can see it's a young company. Hasn't been public for too long. Went public November of 2020, and it did that through a SPAC. So it looks like it on the weekly chart, its low is $6.02. It had a nice 3-week run, but it has pulled back since then. So far for this week, it's actually down 4.6%. but it had a nice 10.9% last week, the week before, 4.8, the week before that, 5.2. So it's had a nice 3-week run. It'd be nice if they could ride the wave and come on back up with the market here. It's not on the weekly chart. It's not oversold, but I don't really like to use those on a weekly. Daily chart here, so you can see that bottom was right at their last earnings, literally on the day, and then it went on that ride right after its earnings report, and it is finding support here at its 21-day moving average, which is a positive sign. The big positive sign would be if it could get back above that 50-day. But it seems like it's using its 50-day as resistance and its 21-day as support, at least right here in the short term for SoFi. So support is coming in at about $6.65. Resistance right now about $7.61 for good old SoFi. Let's see here. We all failed on PayPal. Thanks for that one. Fingers crossed for 10K and restart to pay from Prez. Yeah. That is the end of the student loan moratorium. I have $7.12 as an important level. Zoom in and touch close above, barely, but barely. Okay, 712. Let's go in here. Let's see if. All right, I'll put a line here on 712. How close will it? It lets me get to 713 at this point right here. All right. So, yeah, that's an interesting line for sure. It's got resistance on that line right before earnings, right here on those 2 days. And then resistance right here where it closed below it. Finally was able to get above it. But here, this is where it tapped the, that's a horrible arrow. That's where it tapped its 50-day moving average right there, closed below it. And then, of course, the following day, it closed below it as well. So it hasn't closed above that 50-day yet. So I'm seeing that really as resistance. And then you got support here on that 21-day moving average right here again. So a lot of interesting reactions here. And again, this is at 713. So it looks like it's finding some resistance there. In the recent view of SoFi here, it really looks like, let's see, can I get, it looks like 715, 716 is where SoFi is having a problem of closing above that area on the chart. And you want them to close above. So if we're looking at SoFi here, take these lines off for a second. It closed up higher today than yesterday. If it could close, man, if it could really get above that 50-day and close above it, that would be a real positive for SoFi. But you can see how it's like trapped right now between that 50-day and 21 day, and that's a simple moving average. I wonder what the where is it? Oh, well, I was looking for. I don't know where it was anymore. There's a chart that lets you see the volume on TradingView for a specific date range. I totally forgot. I should have wrote it down. Maybe it was a short key, hotkey. Okay. Anyways, what else? Yeah, are we looking at here? Let's see. I'm hesitant to see it as bullish. Yeah, I don't see this as bullish either for SoFi. I really don't. I mean, not. It's got to close above that 50-day for me to see something a little more positive. Just because, I mean, when we look at the grander scheme of things, I mean, it's definitely had rallies. But if we look here, and let me use this time tool to illustrate this date range here. So if we're looking for rallies in 2022, I don't want to use anywhere else. Maybe right here. So if we go from here to this top, that was a 2-week, and it really bounced around in there, but it at least got a little bit higher. And we're already, if we take earnings as the low, oh, come on. If we take earnings as the low and we go to the top here today, we're already, oh, I went over it by one. We're already 16 days into this. And this one was 14. And let's go look at this other rally here. From this bottom, and I'll go to the top, the furthest away, which really isn't the top. That's a 22-day one. So 14 days, 16 days, 22 days. They're really, really short. And this one, it's just a few days here for this top to bottom. That was a 6-day rally, and it was rated earnings. So really short term. Let's see here. Heavy shorts too, classic case of something is going to happen. Short term, I think it's a monster in 5 years. I would agree. I think SoFi is a good one long term. Short term, it's going to be very volatile until we can figure out what this I think it really all hinges on the Fed. And once the Fed becomes more dovish and less hawkish, that's when especially smaller cap companies can come out of the shadows at that point. This is why you're the best. Most other folks are all, yeah, I appreciate that. Oh, I really appreciate that, Devin. Uh, I really appreciate that. Outlook for tomorrow. I'm glad I made you a little bit of money, or helped you make a little bit of money, and I'm really glad I helped you to save a fortune. That's a good one. Thank you. I appreciate that greatly. Outlook for tomorrow. Short squeezes. See, you're probably sick and tired of hearing me say this. It's a coin flip. I know it. I'm sick and tired of it too. The market is so wishy-washy right now that when you could normally make a bold prediction and things work out, that's one thing. I do think that technology is about ready to break out. I really do. And let me just pull up technology as we're talking about tomorrow. Tomorrow, the Fed's going to get its big deal, its main driver for inflation. That won't really affect what the Fed is going to do until their meeting, which happens on June 14th and 15th. That will be a very big catalyst day. So you should write that down in your calendar. June 14th and 15th. Also write down July 26 and 27, and then September 20 and 21. That or those 3 dates are the next FOMC meetings. We already know that June, they have said, Jerome Powell has said, would be a 50 basis point rate hike. And then July would be a 50 basis point rate hike. No meeting in August because they go on their vacations in August. And then they have a meeting in September, which right now, the market is kind of like pricing in a 25 basis point rate hike for September. But we don't know that one yet. There was no confirmation on that one. Looking at the NASDAQ, it hit its 21-day moving average today. That was a wall. That stopped it. It didn't go higher. And if we just look at the short term here, going all the way back to April the 8th, that was the last time it was above its 21-day moving average. Now, I could also go back and look at this from, what would this be? January 4th. So the second trading day of the year. It was above its 21-day moving average. It fell below it. That was resistance from January the 4th all the way until we were in the snapback rally on March the 16th. However, on March the 16th, it's not like it closed at its 21-day moving average. It broke through it instead of hitting it and being rejected. So I do hold true that I think the NASDAQ needs to come down another 2% or underperform the S&P 500 by 2%. That could be another 4 or 5% fall in the NASDAQ before it hits that really strong support level that I showed you in the chart earlier. So this could be a wall for tech right now. It could sink back down back into its falling wedge here, because it did break out of this falling wedge one time before, and that was back on May the 4th. And then we had that big sell-off on May the 5th. That could be what happens tomorrow. Tomorrow's Friday. A lot of traders don't like to hold going into a weekend, especially, and remember this is an extended weekend. The market is closed on Monday. No trader is going to want to go into a 3-day, a holiday weekend, an extended close of the market with an open position. So there's going to be selling pressure tomorrow. Now that I'm getting my thoughts organized here on just focusing on tomorrow, not about my notes I had written down for today, but just thinking about tomorrow. Tomorrow is a Friday, the last day of the week. It is the last day before a 3-day weekend, with the market being closed on Monday. There is going to be selling pressure tomorrow because of that. So here's what I think tomorrow. I think tomorrow is going to be red. I think the market is coming down tomorrow. Because just thinking about, when we look back in history, when there's 3-day weekends, there's always a lot of selling pressure. If we look at, let's see here on the chart. See, last week, last Friday, we had that real big bounce. That's because a lot of the hedge funds were doing repositionings. So the third week of the month is usually a decent week. We talked about that before. So I think tomorrow is a red one for sure. Let's see here. Agree. I believe a lot of excitement is retail traders. Makes me nervous. That is true. I think so. We haven't had the capitulation in the market yet. Let's see here. Tomorrow's tricky. Absolutely. Finally, QQQ MACD crossed the line. All right, let me just pop that in here real quick, and then we'll wrap this up. I'm hopeful we get a chance to sell the RIP in the AM. That would be probably the best case scenario. If we could sell into strength in the morning. And I think that that could be a possibility, as many traders are going to want to get out, and, you know, maybe they get the market to run. QQQ, yeah, it's right here on resistance at that 21-day moving average. And let me just throw on the MACD here. All right, so there's the MACD. Yeah, it did. There is a crossover there. It did occur. But I don't think tomorrow's going to be a continuation. Let's see. I mean, we can go back to the snapback rally here, right before it. And this, let me circle it here on the chart, on the QQQ, right here in this area here. If we look down below, you can see that right before the sell-off, right here on the MACD, it crossed over, which was this day right here, which was a green day, and the QQQ was up 1.68%. It had just crossed over, you know, like a turtle just sticking its head up, and then the very next day, sell. It was down 1.4%. Next day, down 1.4%, and then down 3.6%. So even though it just stuck its head up, it's almost the same situation. If we go back here and look at March the 2nd on the chart, March the 2nd, it was really, really close It might have actually done it. It was really close to touching its 21-day moving average. Next day, boom, sell-off. I think that's the situation we're at. I think we're more in this situation here than we were when we were at the beginning of the snapback rally here. I think we are right here. We'll see tomorrow whether I'm right or not, but this is where I think we are. Because here, when we broke above that 21-day moving average for technology, it exploded past that 21-day moving average. It didn't close just under it and then break it the next day. It blew right past it. So this is what I'm seeing right here where this green arrow is. I think tomorrow is going to be red. We're right up right now. We are right here on top of that 20, right underneath that 21-day moving average. It's resistance. I know it just turned here on the MACD, but we know that just because it sticks its head up, that doesn't mean we're out of the woods yet. So I think it's going to be a red day tomorrow, especially for tech, for the NASDAQ. Let's see here. All right, so there's the QQQ and the MACD. All right, earlier this week you mentioned trading the SPY. I think it was, what type of trades would that be? I'm trying to familiarize myself with the SPY technically, because I use the SPX, so I just want to be able to use that chart in these daily live streams, because I believe you guys are using the SPY in your trade. So I just want to be able to give you a technical picture of what the SPY is doing to help you guys out, even though it's so close to the SPX. See, for the S&P 500, 4,500 is its real big resistance line. So for the SPY, that's kind of like up here at 457. 458. That's the big resistance that the SPY will have. There will be a resistance right around 430 before that big resistance. So those are the two resistance areas that the SPY will hit if we ever get a rally going back up to those levels. But right now, the SPY is also at this interesting place where it's at resistance at 105. And let me put that line there and then go in. If you look here today, it closed below or right at this 405 line, 405.31. If we go back to here, May the 9th, it broke down under that. 405 was resistance. On May the 10th, 405 was resistance. May 11th, 404 was the resistance. We go to May 16th, 403 was the resistance, so getting a little bit lower. And the only time, going all the way back to the beginning of May, the only time the SPY has been above 405 is just real briefly on May the 17th. It got to 408, a low of 402, a high of 408, and it closed at the 408. but the very next day was a sell-off, a big one, 4%. So it is at resistance too, making me think that at least short term, now is the time that the SPY is going to go down tomorrow. So I think it's going to be a red day here on the SPY. Just short term. And then how low does it go? Maybe we hit our next low of the year next week. I don't know. Tuesday will be the last trading day of the month. That usually provides pressure. It's a shortened trading week next week. Let's see here. No, that doesn't quite line up. That's not quite a perfect fit. If we go shorter, not quite yet. So there's not a clear resistance line here. The 21-day moving average has been the clearest resistance line in the short term. It's really this price point at 405. Scalping SPY options is great. So let me go to a weekly view here. Okay. So on a weekly view, I mean, it really makes that 405 level really stand out. Really stand out. I know the past few, so for the past 3 weeks, it has been making higher lows. That's good. But it hasn't been making higher highs yet. If it could break above the 405 tomorrow, then we could get and close up there. Maybe we could get a higher high. That would be good. Otherwise, we're going to start creating a wedge pattern here. I mean, I can't quite line this up yet. It just isn't working. It almost works, but it doesn't quite work. And if I go further back to ignore this 1 wick as maybe an anomaly, then that lines up a little bit better, but then that means we're getting very close. We only have 1 week left before this thing breaks out, up or down. Okay, I'm just messing around with it there. Let's see here. When do those union pension funds rebalance and relocate their funds? The funds have to invest. They also know what the market move, the direction is. What do you think? So it's usually the 3rd week of the month when rebalancing is done. Really getting to the 3rd Friday of the month is what you're looking for. That's when a lot of the rebalancing takes place. which actually provides a lot of upwards pressure in the market, causing it to potentially be a green week. We went through and counted Fridays, counted the third week of the month here, and I mean, the past 7 weeks have been red. Hopefully we can hold off and keep a green candle for this week. I mean, that would be a good turning point or potential. Definitely, hopefully we can keep, if we can keep this candle for this week green, then we won't make a new low for the week. Therefore, we can keep this uptrend here of making higher lows. That's a good sign. Whenever you're making higher lows, that's good. It'd be great if you were making higher highs also, because then maybe you could say that maybe we're forming a reversal and a trading channel ascending out of the hole that we're in. There's another stiff resistance up here for the SPY when it gets close to making a new all-time high again. And that's right here at about 471. That's a tough one too. Let's see, how does it line up here? This 384 is an interesting spot because when we made that low 3 weeks ago, when we made that, let's see, it got down to 385. That's interesting because when we come over here, going back to March of 21, that line in January of 21 was resistance. The SPY broke above it, barely went below it, and then finally it used it as support. That's an interesting area because that was the low 3 weeks ago. But we're definitely starting to make lower highs, which is good. If we can just keep that, keep this thing from elevated and not fall so much tomorrow, then that would be a good thing. All right. Well, I guess we can wrap today's live stream up. I really appreciate all of you being here. I love the questions. That's my favorite part of the day, being able to answer your questions. If you did, remember, if you found value, click that like button, share the video, subscribe if it's your first time watching. Definitely enjoy having you here. And if you want more of this, click the first link in the description and take a look over on Patreon. We do a lot of, we share a lot of information. Hopefully it's working out. It sounds like it is. I'll see you on the weekly here for the S&P. I mean, it broke 4,000. That's significant. It closed above 4,000. That's significant. Can it hold it tomorrow? Can it stay above? There's this black line and a purple line kind of making this elongated X. If it could stay above that tomorrow, that's a positive development. All right, cool. Well, we will wrap this up and I'll see you guys tomorrow after the market is closed. So I appreciate you being here. I appreciate you spending the time. Appreciate the questions, and we'll go ahead and wrap it up. Thank you so very much, and I'll see you in the next video. Good night.